Hello, everyone. Welcome back to the MHP Show podcast. I'm your host, Derek Vickers, and we're talking about, mobile home parks, manufactured housing. Maybe I'll start saying that more, after you go meet with some guys. That's all they say is manufactured housing. Maybe I'll do that. I don't know why I'm so used to saying mobile home parks, but this is the Mobile Home Park Show. So that's what we're talking about on this show. And I love doing this show, man. I love doing this show. We're going to talk about anything and everything that has to do with mobile home parks and operations and different things. I love this episode of what I'm going to talk about today because I think when I'm always asked this question, I enjoy going back and answering the question. And so I'm going to do an episode about it. And, I think it's going to be great. And before we get started, look, I wanted to let you guys know about what we're doing at Victory Capital. Look, if you haven't looked at what we're doing at Victory Capital yet, and as you've heard me say before, and the more that the data comes out, like if you have cash sitting on the sidelines, or you're a business owner, or you're a high-income professional, you're a doctor, you're a lawyer, you're an insurance professional, and you're making a bunch of money, you've got cash sitting on the sidelines, or you're just closing your eyes and you're giving your money to your financial advisor and saying, hey, do something with it. I just don't like those strategies, right? Like your cash is dying in the bank. And this is just my personal opinion, but if you're like that, and if you like this asset class, come and take a look at what we're doing at Victory Capital, because we actually provide the returns that we provide in the specific assets that we're buying. The returns are massive in what we do because we're doing these, very specialized value add projects that not many people can do effectively. And so that's why I'd love you to come and partner with us. If you love this asset class and you want to get into it, we can help you with that without having to do any of the work, because you're good at running your business. You're good at running your practice. You're good at making money at your job. You're good at selling stuff. You need to stay good at that, because once you go and buy a mobile home park yourself, which some of you may do, you're going to realize that it's not as easy as you may have initially thought, because in order for it to be easy, you're going to have to go out and buy a 4-cap deal, which you're not going to do. You're not going to do in the beginning unless you just got a bunch of money and you don't care and you want to park it and you don't mind making 4 or 5%. So look, at Victory Capital, we help people in that situation. They love the asset class and they want to come in and get great returns without having to deal with it's not tenants, termites, and toilets here. It's tenants, infrastructure, code enforcement, and things like that. So if you want to check out what we're doing at victorycapital.com, would love for you to partner with us. Would love to chat with you. You can schedule a call with someone, myself or someone on my team, and we will definitely show you what we're doing at Victory Capital. Okay, so this episode is going to be super great today because I get asked this question quite frequently. And the title of the episode is going to be what I would do differently if I was starting today with only $50,000, because I think that's about how much I had when I first started investing in mobile home parks. And, I should go back to this because it was such an interesting time in my life, really. I mean, it was early 2020. The prior year before that, the insurance business, we were crushing it in numbers. But I just started to realize that it was like, man, I'm really working for someone else. Like I'm not in action. I'm an entrepreneur, but I'm not a real entrepreneur, because I still had people I had to answer to. I still had people that had never cold called trying to tell me what to do and change my business. And it pissed me off. And then I realized I got smart, because some people in this business never sort of outgrow this, because you sort of get stuck just like you would in a regular job. Like you realize that, like, hey, I actually don't have the equity in this business. I don't own this business. I can't sell this business. So like, where is the wealth building here? Yeah, you get renewals and things like that. But anyways, COVID happened and I'm like, I don't know. It was just something that kicked me in the teeth. And I'm like, okay, I got a little money over here. I need to get this real estate thing going. And one thing I don't talk about very much when I get into this topic, and I've talked about on other shows, is that I actually went to a friend who was buying some mobile home parks, and I was like, "Hey man, I got 50K. Can I invest with you?" And I don't think he was really doing syndications anyways, but he sort of told me, no, I didn't have enough money, right? And I was like, "Oh yeah, okay, I'm just gonna go do this myself then." And that's just how I am. If somebody tells me no, it's just like, okay, I'm just gonna go find another way to do it. Which, I love some extra motivation. And so basically, what I did, I was like, okay, shit, I'm gonna have to do this myself. Which is the best. That was the best thing that ever happened to me. Him telling me that, hey, I didn't have enough money to invest, because then I actually went out and actually found a list, started cold calling the mobile home parks, and none of that would change. Like, I would not change any of that. I think I had about 50 grand in my account, and I started cold calling parks. Now, one thing I would do differently, and in a lot of this, like, if you just have $50,000, it's actually not as limiting as you might think. And, I think your mental state is super important in this, because, and again, I would say I wouldn't change anything, but I would change the way I was thinking about things and the thought process I had. I was like, okay, I have 50K. I can go and I can buy these small deals. I can figure out how to do seller financing, maybe zero down. I was listening to Abraham Anderson's, a friend of mine, his podcast in the beginning. His podcast helped me tremendously. He just broke it down um, really well. But he was getting stuff, I think, for zero down. So I was like, okay, wow, I can actually go out and do this. Um, and so I just started calling, right? But actually, I would have changed the way I was thinking about this, and not just went after deals that I could afford with my own money. With 50K, I mean, you know how much capex these damn properties take? Like, 50K, like, wouldn't have got me anything. Maybe, like, I did find some smaller deals that I was trying to put together, but I would just change my mindset in the beginning. Just say, hey, I'm going to go out and build an affordable housing platform, like an asset platform. But then I was more thinking about, like, hey, I'm still going to do the insurance business, and I'm going to build these assets on the side and just put my money in these assets. But I should have just went out and said, hey, I need to go find good deals, and not find deals based on the amount of money I had, or based on the amount of money that I thought I could raise at the time. And I still got to fight myself through that. These days when I'm finding deals, you're always trying to push and get to the next level. So that's one thing I would change, is like, I would change my mentality around it, because I was thinking like, yeah, I'm just going to go buy one or two assets. I was running the numbers. Oh, maybe I could have 100 units by the end of this year or something. And so, I passed on some deals that I'm like, man, how is a $5 million deal? Like, how can I come up with a $2 million down payment or a $1.5 million down payment? It just wasn't real to me at that point. Um, and I was just thinking wrong. Like, I really needed someone in my ear to say, hey man, just go for it, dude. You can find, um, like, what is it, when the student is ready, the teacher will appear? Well, I think when you're committed to something, when you're actually 100% committed to something, you will actually figure out how to get stuff done, as difficult and gut wrenching and stressful as it may be at times. So that's one thing I would change. I would change my mentality around the entire thing. Okay. And this leads me into, like, one of the biggest mistakes that I made was trying to do all the deals alone. Exactly what I just tell you. I would not try to do all the deals by yourself in the beginning, even if you have a bunch of money, right? Even if you have a bunch of money, like, how are you going to operate the deal? If you're going to do that and you have a bunch of money, like, sure, you can do that, but you're just going to be limping into another job at that point, if you're somebody that has a bunch of money. But if you don't have a bunch of money, you have this weird mindset that you have to own it all. And I talk to guys all the time. Well, I don't want to partner with anybody. You're getting a loan from the bank. You're a partner with the bank. Like, the bank owns 70% of the damn deal. They loaned you the money, right? So you're always gonna have partners unless you're paying fucking cash for everything. Try not to drop the freaking F bomb on here, but it just happens sometimes, guys. I get a little excited, right? But I would say break that mentality of thinking you need to do every single deal on your own. Yes, it would be nice to own it all yourself, keep all the cash flow, right? It'd be great. But you're gonna miss out on great deals because you're like, I only got to do like what my money can buy, and I missed out on great deals. That $5 million deal I was just talking about is probably would sell for 12 right now, and that was 5 years ago. At least 12, maybe a little more. Um, and so look, like, don't be afraid to bring in a partner in the beginning. If you don't have money, like, you got to find a partner that, obviously has money, right? That can get you to the next level because every billionaire or somebody that's ultra successful, they didn't do all this shit alone. Like, they had people to come in and help them along the way. I was lucky enough to find a great partner, um, that really showed two great partners that actually showed me the business. And I learned just how private equity structuring worked. I learned how to like structure deals correctly. I learned how to like how much capex you needed to raise for deals, how to deal with the banks. Like, I just saw how they operated, and it gave me a good ideal scene in my head to figure out, okay, this is exactly how I need to do it, instead of just trying to figure out on my own. But don't be afraid to partner with somebody, right? Do not be afraid to do that. Now, I will say this, something on the mentors. I was actually looking and following the right mentors, right? Because they were looking at scale, they were looking at private equity, they were looking at like, hey, we got to raise money, we got to do this, we got to do that. But if your mentor is basically, hey, I'm just paying cash for every deal and I'm just, sitting, and like, maybe that's a good option for you. I guess it just depends on your goals. But my point is, you need to find the right mentor, the one that is in a place where you want to be, and, follow their process, right? Which, in my opinion, who I learned from had a great model and goal and what they were going for. So it was perfect for me. Okay. So, and going back to this as well, it all goes back to the mentality thing and what you're trying to do. Um, okay. And then when I'm looking for deals, right? If I went back and looked for deals, like, I would have probably tried to specify my criteria a little bit better, because once I did that, it was easier for me to actually go in and look at deals. But I actually don't think, now that I'm thinking about it, I don't know if I would have been able to find that criteria, um, if I hadn't done that first deal. And it was ugly. It was ugly. And so that leads me to another point I wanted to make, is that the deal doesn't have to be a slam dunk home run deal, or it doesn't have to be the perfect down the fairway deal for you to get in, get some experience, especially if you're operating the thing. If you don't have any money and you brought in a partner, you're going in and operating the thing like that. That information that you are learning is invaluable. It is invaluable. You're going on knocking on doors. You're handing out notices. You're getting threatened. You're dealing with trailer dogs. You're dealing with crackheads behind the homes. You're dealing with homeless people. I dealt with all that, right? And I figured out how to handle that. You're dealing with contractors. You're learning firsthand. You're like, oh, Derek was right that all the contractors are idiots. Derek was right that you have to follow up with the contractor. So you're going to be learning all that firsthand, which is invaluable. It is invaluable. Um, in the beginning. Right. It's so valuable to do that, because that is actually more valuable than the return that you're going to generate from that deal. Although my first deal ended up being a home run, um, I still learned a lot on that deal, which was worth way more than what I actually created, all the equity and the cash that I created on that deal. Okay. So that's just invaluable, that information that you learn from doing the deal and operating it yourself. Okay. Now, I will say, like, a couple more things on this point. It's like, you want to maximize returns, but like, when I looked at this deal, I remember actually, I think if you guys remember how I got brought into this deal, the partner who was my still a partner in some deals now. He had an operating partner that backed out on a deal that he had under contract. He had told me he had this under contract, and I went and looked at it. I'm like, oh shit, like this is a terrible looking park. Like anything that was really bad. You had park owned homes, private utilities, vacant park owned homes, vacant handyman park owned homes at that. Anything that was wrong that you probably shouldn't do was involved in this deal. Right. And I went and drove this deal. I'm like, oh my God, like this is terrible. This is a trailer park, buddy. This is some 8 Mile shit right here. This is exactly what this was. And I was like, but I had the confidence just to say, you know what, screw it. I'm gonna go. Screw it. I'm gonna go. I'm gonna figure it out. And I remember that first day before I went to that park and I had to go knock on doors and hand out notices. I'd never done that before. I'd cold called businesses, but this was different because I'm going into like this place was just yucky. It was yucky. And I'm going in knocking on doors and I was a little terrified because there was people that were delinquent that we had to non-renew on the first day. So, it was a little scary for me. And but if I had looked at that and said, hey man, that deal is actually not perfect. It's not really what I want. I would have never gotten that experience. And because I did that, I actually learned, I'm like, okay, this is the kind of deal that I need to buy. So even if the deal is okay, you should go in and do it because you're going to go in. If you're like, man, this is an all tenant owned home park, I can do increases every year. And you're like, man, that's pretty good. I like that model. Or if it's a park that's half tenant owned and half park owned, you're going to get the best of both worlds. You're going to be like, man, I like converting these. Maybe you like keeping them park owned homes, or maybe you like keeping the tenant owned homes or just running it how it is. I don't know. But you're not going to really find that out until you get into a deal. Right. So at some point, you're going to have to clap and pull the trigger. Right. And, I think the easiest thing for people in the beginning, you hear about me talking about this all the time, is just like, hey, find a market first, find a market. And that's why I think I was so successful in finding all these deals and getting into these deals in the beginning because it was in my backyard. I could drive to it. It was 15 minutes from my insurance office. And I was like, hey, man, I want to go find deals in Florida, right, in the beginning. It just made sense because it was close. It was close. People said Florida was too expensive and whatnot, but I still did it anyways because it was close and I could drive to it. And so I knew I wasn't dicking around with I found this deal in North Dakota. Derek, I found this deal in Maine. Hey, Derek, here's a deal in middle of nowhere, Kentucky. Here's a deal in Nebraska, right? I wasn't looking around at all these places. So it was easier for me to say, bang, let's go. And I didn't have to fly 15 hours to get there. So I think that helped me in the beginning because I understood the market immediately. I was able to run some test ads for homes. We sold some park-owned homes. We were able to get higher rent than we thought. And I was like, man, I know this market now. Like, boom. Okay, now we can go buy a deal for this. We can go buy a deal for this. We can go buy a deal for this. So that instantly gave me the knowledge, which then gave me responsibility. And then I had control over I had control over everything because knowledge, right, leads to more responsibility over an area. And that responsibility actually leads to more control over that area. And I now had that understanding of the market that I could say, oh, that's a good deal. That's a good deal. That's a good deal. Not a good deal. Not a good deal. That's a good deal. But I see so many guys out there, they're going to 50 markets looking for the cheapest deal in the middle of fucking nowhere. And I'm like, where you live? Oh, I live in Tennessee and I'm looking for deals in freaking New Mexico. I mean, we live in Florida. We're doing deals in Arizona now, but like I'm talking about on the first one. Like, I think that's what I did right. Knowing the market and like doing that first deal, even though I was scared, I didn't think it was going to be that great of a deal. I had no idea how I was going to do it. I had no idea how to convert a park-owned home. Had no idea how to do a notice. Had no idea how to do an eviction. Had no idea I knew how to communicate. I could communicate. I was a great communicator, and I had a lot of brass, baby. I had a lot of brass that I was like, hey, let's just do it. And that helped me understand the market because I did a deal in that market. Same thing when we went to Arizona, when we bought the deals in Arizona. It's like, okay, I went there, I fished around the market, but we didn't really understand the market as much as net we do now because we own the deal. We had a better understanding in the beginning, but we didn't get really the knowledge. Well, we got more, I guess, intimate knowledge, I guess, if that's what you want to put it like that, when we bought the deal and went there. So I think, again, not to get off on a rant by this, but like, some of you guys are looking for the perfect deal, and it's not going to be perfect. None of these deals are going to be perfect. I mean, we find shit all the time in due diligence on these deals. It's unreal. And not until you get into that first, when you get your boots on the ground and you operate it, you're not going to be able to understand what you want to buy first. And so I think I did that well, but I probably could have did that sooner and like, hey, let's just go and figure out how to buy this deal. And then, I would have learned faster. But I got into a deal 6 months after I actually started looking for deals. And what I did is I had, so basically when I was in the insurance business, this is what I did. I wouldn't change because I was very committed. Someone asked me, is like, hey, you want to do real estate? And I'm like, yeah, I want to do mobile home parks. That's what I'm going to do. They were like, oh, you sure you want to get into this asset? This is the asset class I want to do. No more apartments, no more nothing. I cut everything else off. And then I just reverted some of my outflow, some of my calls from the people, the VAs I had calling for the insurance business. I directed them to real estate. Then I would make calls. They would set up appointments for me to call. So I just started generating some action. And that's how I started to get stuff. So I would say to copy that, that's not necessarily something I would change, but I would copy that. So again, the point I was trying to make there is like, hey, your first deal is about learning the business, and even more than that, learning what deals to do and what deals not to do, and learning a lot about the market. Not necessarily about maximizing returns. Okay. Now I wanted to make a note like, hey, if you're out there looking and you're like, hey, what are some of the markets that I would target right now if I had limited capital? Well, look, you can do smaller deals if you want to. I know guys that do smaller deals really successfully, and we do some smaller deals. We do some 20s and 30s, but everybody has their, like the institution would say the 100-unit deal is a small deal. Like to me, that's a big deal. Like 50 is a solid size deal. We like to play in that range. So whatever that is to you, if you're getting into 10 to 15 lots, you can get some good deals. I would just say if you're looking for a small deal like that, you got to steal it. You got to get it for a super low basis to feel good about that deal. But I like to stay in the large markets. So just pull up the states, go to the top, 50 cities of population in the US and start there. I like to be at 1 million plus, 750 and up in the MSA, because that's just going to drive the demand that I want. Now, I will say this, when we're talking about the markets that you choose, if you are in the middle of nowhere and there's some parks around there, I wouldn't be mad at you for starting in that market because it's close to you. So, but again, if you buy the deal, you got to buy the deal really well. Right? Because yes, it might be an in-place 12 cap, but who knows? You ain't going to get a 7 in a small market. You're probably not going to get an 8 if it's a small deal. You're going to have, you buy it at a 12, you're probably going to have to sell it at a 12. So you're just going to have to factor that into the numbers. Right? But I do love the idea, and you hear me say this about staying close into your market. I know that's kind of like, oh, Derek, well, you told me to go to the big city, but you also told me to stay in my market. Yeah, like they're data points. Like look at it and see what fits the best for you. Like what's true for me may not necessarily be true for you. Like I just like playing around the big markets, and I'm lucky enough to live in one. So it's easier for me to do that. Okay. Now, if I only had the 50K, I'm like, how the hell would I use that now? So I would use that for, earnest money deposits, good faith deposits with the bank. I would use that for due diligence costs and some kind of reserves, right? I would just have that there so you can at least move fast on some of that stuff. Right. So I think that's important. That's what I would use that for. And what I wouldn't use that for, I wouldn't necessarily in the beginning. I don't know if I would use all that on maybe marketing. I'd maybe hire a VA to hit the phones with me. Um, but I wouldn't waste it on other bullshit right now. I would just use that as sort of a reserve money to go to your earnest money. So that's just one less thing that you're gonna have to go out and find if you find a deal. Like if you have zero money, you're gonna have to say, "Hey, Derek, I need 25 grand in earnest money or something." And we'd have to figure something out. There's somebody else that may be able to loan you the earnest money, or the money for the due diligence costs. Right. So I would save that for those particular things because once you close, you're gonna recoup the money back from that anyways. Okay, now this is something else I wanted to talk about. Like one skill worth developing before you spend $1 reading a rent roll. I don't know the answer to that question right now. Let me think about that. One skill that I would develop. Well, I think you've heard me say this before. It's got to be your skill of like, hey, you don't know everything. You don't have all the data. You don't understand. But if it feels right and you're like, man, I like, you're going to have to jump at some point. You're going to have to go. You're going to have to put your foot down and you're going to have to make the decision to put the deal under contract, to spend the earnest money, to send the LOI, to sign the contract, to deal with the attorneys and look at the stuff and renegotiate and all that. So again, it takes a little brass and you're going to have to develop the skill of doing it anyways and doing it and moving forward despite not having all the data. But you got to have some data, right? You're not just going to do it. But you can't get into analysis paralysis on this shit. So you can't just think about it. Like, speed is power, man. Move with speed, move with certainty. Like, hey, I want to do this. I'm going to go do it. I'm not going to half-ass it. Like, I'm done half-assing. Like, I'm done. I'm even talking to myself right now. I'm done half-assing it. And that's the skill that you need to develop. And you're like, oh, and you're going to listen to this and be like, oh, this is just it's not tactical. It is tactical, dude. It is tactical. If you want to get into this business, you got to go out and do it. Right? You need to act like someone that's already in the business. So what if you want to get in the business, you only have 50K, what is someone that's in the business doing? Where they're finding deals, they're looking for investors, they're building banking relationships, they're dealing with operations BS on a daily basis. And so you got to start doing those things that you can do. If you don't have a park, you obviously can't deal with operations right now. But you can, go network with people that are operating. You can go call me if you're around. I'd love to walk you through a park and show you some stuff. Take you on a walkthrough if you're around in the area. Be driving parks, calling sellers, calling brokers. Like, what is that person doing? It's sort of fake it till you make it, I guess. Right? Because you have to become the person. Then you do the things that the person does. And then you have that. Okay. Derek's talking this shit again. Whatever. And this is another thing. Because I see this, and we used to do mentoring, and people would be in the program, and like some people would take action, and like we can give all the data in the world, but this I would skip. So the masterminds are good for networking, right? And they're great for all that. But right now, dude, you need to take action. Joining a mastermind is not action. Making 50 calls tomorrow is action. Sending out 50 letters tomorrow is action. That is action. That is going to move the ball down the field. What I would do if I were you, I would make a point system, right? I would make a point system, and like this is what I do when I'm like we're working our investor pipeline. Like I basically have a point system to where if I call an investor and say, "Hey, are you coming in or not?" That's 2 points because I asked for a commitment. I was intentional. But if I call them and say, "Hey, how you doing?" The politics are, oh my god, the world and football and talk about bullshit, then that's 0 points, dude. That doesn't count as a call. But if I called him and said, hey, you looked at the deal before, are you coming in or not? We're getting ready to close the fund. No, I'm not. Okay, it's still 2 points because I got an answer, right? But it was intentional. That's 2 points. 1 point if they call and don't answer, I leave a voicemail and send a text. That's 1 point. And then you're going to track yourself on these points. And then every week you're going to graph your points right? On a line graph, and you need to keep those points going up every week. There's a lot more to that, but that's what I would do, because you need to have intentional conversations. You need to have intentional, like when you call, I want this guy to pick up the phone. I want this guy to answer, and I'm going to have a conversation with them. Right. So I think more so than going to signing up for every guru online that tells you you can do this and do that, I would get on the damn phone and make calls, because you got to develop that muscle of being able to do that. You got to develop the muscle of being able to take rejection. Build up the muscle, because you're going to have to call investors at one point. Like, you're going to have to do that, right? You don't get this without work. Like, I'm sorry to tell you, but it takes work. It takes work, right? Maybe one day when we're a communist nation, you won't even have to work. I hope that doesn't happen. But like, you got to get your ass up and work. And I think that's going to be better for you than you going to some damn mastermind, right? Like, I would much rather see you like, hey, Derek, I called 250 park owners this week. Hell yeah, dude. Versus, oh yeah, I went to this course and he told me that I needed to say this on when I closed and this when I closed. What I did well was like, shit, I'm just going to pick up the phone and call the owner. I'm going to pick up the phone and call the owner. I'm probably going to sound dumb. I'm asking questions. I'm like, oh, I don't know. I don't know. I don't know anything about code enforcement. He's talking about code enforcement. I don't know anything about that. But you just kind of work through it and you work out your pitch, right? Because a lot of people get stuck in the significance in the learning of all this stuff, and they never go out and do anything. It's crazy to me. You can have somebody that's super smart in mobile home parks. They're all around the Facebook groups online. They know every damn thing about every type of sewer line, about every way to fix septic, about every deal, and if it's good or if it's not, but they've never bought a damn park. Do not be that person. Do not be that person. You can go in, you can learn, take action, learn, take action. You got to have a balance of both. You got to have a balance of both. And I'll tell you, make the calls, dude, and take action. Skip the gurus for now. Skip the gurus for now. Skip the masterminds for now. You got to get to work. You got to get your ass to work. You can still do that stuff, but you do not replace work with that. That's the dumb thing to do. And don't be an idiot. I tell myself this all the time. I was doing a presentation over the weekend, and I learned something about myself. I'm like, guys, don't be an idiot. I'm like, I was being an idiot last week because I was, I forget what I was doing, but I was being an idiot, right? We can all be an idiot at some point. All right. Another point I wanted to make here, and this is something that's like overpitched online, I think. And this is what I wish I would have known about seller financing going in. I was trying to get seller financing on anything because I didn't have the money. Now, most of your sellers, all the deals that I've been involved in, all 51 of them, with 5 more going right now. I have one seller financing deal going on right now. I did one seller financing deal last year, one in 2024. So that's 3 deals. Is that it? Yeah, 3 deals, seller financing. I don't know what to tell you. Like, it's a tool. And when you're playing around in these big markets, getting seller financing, if you go in and say to the seller, hey, I want to buy this via seller financing, they're going to automatically think that you're not serious. It's true. It is very true. Unless I just suck at negotiating. Maybe I suck at negotiating. But this is just what I found. And I know if I would have went into a lot of these deals doing only seller financing or just like trying to get 0 down on the deal, I wouldn't have done any deals. I wouldn't have done any deals. So that's what I would tell you about seller finance. It's just a tool. Sub 2, it's just a tool. If it works for this particular deal and it's a benefit to you and the seller, that's great. Because sometimes we had a seller financing deal where the seller's like, hey, I want 10%. I'm like, dude, I don't want seller financing. I don't want seller financing because I can get 7 at the bank. And I don't have to deal with you for 5 years, which was actually an even bigger plus point on this deal. I know a couple of people probably know what I'm talking about. Glenn Yaney, I know you know, if you listen to this, you know which deal I'm talking about. Maybe we'll get that deal at some point. Yeah, so that's what I was looking at seller financing as the holy grail, and that's actually one of the reasons I got into this business, because I was like, oh my god, seller financing is going to be easy. I don't have to go through a bank because I don't have a net worth. I don't have a balance sheet. But the truth be told about it is that it's a tool that you can use in the right situation. Maybe I could have used it more. I don't know. Call me an idiot for, just doing bank loans, but it's just easier. If we've got a good relationship with the lender, it's sometimes a little more difficult for seller financing because you have to negotiate, 50 terms at this point. All right. Um, to close it out here is that, look, the moral of the story is, if you're starting with little to no money, if you're starting with 50 grand, like I did, um, it can get you in the game, right? But you got to hustle your ass off to stay in the game, right? There is always value in somebody that can find great deals or round up a shit ton of capital. There's always value in that. There's always value in that. If you came to somebody, or if you came to me and you're like, Derek, I got investors, I can raise 10 million bucks at the snap of my finger. I love you. You're a great operator. Like, let's do something. Okay, maybe let's figure something out. I got to like you, as long as you're not an idiot. Or if you're like, Derek, I got deals, man. I got deals. Right. And this is one thing I learned in the beginning. I found a deal that I was in the beginning, I was trying to negotiate some seller financing terms, piss the seller off because I was asking for terms that I could only sort of figure out. But there was an operator that I got introduced to that was going to take this deal, and I was going to get a $50,000 fee on that. I'm like, shit, dude, in the insurance business, it was hard to make 50 grand. And now I'm going to make 50 grand off this deal. I was like, okay, it opened my mind up. Right. But my point is that there are always room for people that are great at finding deals and that are great at bringing capital to the table, and great operators. If you're a great operator, there's always going to be something for that, because there's people with money that don't want to do anything. There's people that find deals that don't want to operate and they don't have money. And there's all the above, right? There's people that love operations and they don't want to raise money. So, but again, 50 grand can get you in the game, but you got to hustle. You got to hustle to stay in the game. And that's really what it is in life too, guys. You're going to have to get your butt to work. You're going to have to get your butt to work and do it. Okay. So look, I hope you found a lot of value in this podcast, because I get asked this question a lot, what I would do if I started over. And maybe this helped you, maybe it didn't. It gave you some insights on some things I would have done and continue to do again, and some things that I didn't do and I would have changed. So anyways, that's it for the MHP show, guys. Look, if you want to check out Victory Capital, go to victorycapital.com. You can email me, Derek at victorycapital.com. You can reach out to investor relations. You can talk to Milton at victorycapital.com. That's victory, VICKTORY capital.com. If you want to be a guest on the show, sure. Come on, man. Come on. I wouldn't mind interviewing a couple people again instead of just talking to myself the whole time. Let's see what else we have. We're Fund 1 is rolling along. We got 7 properties in Fund 1. We have 2 others that we're looking to put in Fund 1 right now. And if you want to be a part of that, would love to have you come in. If you're around, you want to meet, I'd love to take you through some of the properties and go on a property tour with you. And look, like and subscribe. Follow me on Instagram, LinkedIn, Facebook, X, even though my X account got screwed up for something. I didn't say anything wild, but so thank you all for watching, and we will see you all next week. Peace.